Features available in today's fixed-indexed annuities can give consumers the growth and safety that they crave while allowing carriers to survive a low interest rate environment. So writes my guest. He is Aviva USA Senior Vice President for Annuity IMO Sales and Distribution, Lance Sparks. Lance, it's a pleasure. Thanks for joining us today.
Oh, yeah, absolutely.
So let's talk about the low interest rate environment. What is that doing to the industry right now?
Absolutely. And as you mentioned, the largest headwind that we're facing right now as an insurance carrier is the low interest rate environment. And if you think about how an index annuity works, where the carrier takes in funds from the client, we're going to invest that in a portfolio, typically made up of investment-grade bonds, and then we're going to use that yield to pay for our overhead and then guarantees in the product, and what's left over creates an option budget. And then that option budget is used to put into an index, which is going to determine what the client gets as a crediting rate. So if the index goes up, we exercise those options, and then we credit the client an interest rate. If the index goes down, then nothing happens to the option, and the client doesn't lose any money. So the insurance carrier's yield is the single biggest factor in how much option budget is created, in addition to the cost of those options. But the cost of the options have been relatively stable for the last couple of years after spiking during the financial crisis. So if the carrier can't earn an interest rate yield, it doesn't leave enough after the guarantees of the product and the overhead of the insurance carrier to provide for an option budget.
One of the criticisms of annuity products in general has been that they lack transparency and sometimes can be somewhat complex. Do you see these products becoming more consumer-friendly?
Yeah, I think the trend has been to try and make the products to continue to be simpler to understand. But as carriers develop new concepts and become innovative in order to deal with the headwinds that we're facing today, then we're going to see new things introduced into the market. And whenever there's something new introduced, I think the first thing that comes to mind is that it's because it's new, it's difficult to understand. And it will definitely mean that carriers and our distribution partners will need to continue to work hard to provide training programs and tools for clients to understand how the products work.
So the title of your article is The Annuity Evolution. How will these products evolve over the next couple of years?
When you think of 76 million baby boomers that are starting to retire every day, most of them grew up with a paycheck. And I think all of us that manage finances are used to having a fixed income coming in. And as you've seen pension plans go away, annuities are a great opportunity to create a guaranteed lifetime income stream for people to manage their finances in the future. And we know that one of the single biggest fears of retirees is running out of money. And we have unbelievable examples of older people that are afraid to take their money. They may have millions of dollars in the bank, and they're calling their financial advisor to ask them if they can buy a pair of shoes. And they're just concerned about running out of money, and making sure that we take some of that pressure off of them and know that they have an income coming in that they can count on. I think relieves a lot of pressure, and it's definitely something that consumers are looking for.
Lance, you talk about these headwinds in one way have a good effect in that they can create sort of innovation. Can you expand on that some?
Yeah, I think in any situation where you face adversity, then the cream's going to rise to the top. And luckily for Aviva, we've partnered with a lot of very creative firms to continue to look at product development and figure out how we continue to offer consumers benefits and also make it worthwhile for our distributors to look at that product and want to distribute it over other vehicles. And, for example, Aviva, with our partnership with the Nexus Group, has the balance allocation annuity, along with the Baylor rider. And it's an example of the client may forego a small portion of their guaranteed income in the future, but for that, they get a participation of whatever their index credits. So they could actually earn a higher income in the future. So that design is more friendly for carriers from the reserving standpoint. It still gives clients a guaranteed income, but actually offers them more potential income in the future if the index performs. So that there's, in anything, the client is giving up a little bit of guaranteed return in exchange for a little more upside opportunity. In addition, you're seeing better strategies in the base contracts that are being offered, and you're seeing more strategies that look at proprietary indexes or even indexes that are controlled, risk-controlled or volatility-controlled to determine their holdings in equities versus bonds versus cash. And those indexes weren't used in the past couple of years, and you're starting to see more products introduced with that type of concept. And again, the client's money is not invested directly in the index. It's the options that we buy in those indexes, but because they're controlled more through volatility and risk and what's happening, we're able to see some more stability in that type of index. And then the other thing we know that consumers are worried about when they retire is inflation eating away at the amount of money that they're earning. And so, the balanced allocation annuity, along with some other products from Aviva, offer increasing income options in order to make sure that the client's income keeps up with inflation.
Finally, Lance, in the last minute, can you talk about the current state of the regulatory environment with these products?
Well, I think that as an industry, the initial regulatory issues were more around sales practice, which I think the industry has done a fantastic job of cleaning that up and monitoring that, and actually having better agents and advisors in the field. Then we also obviously dealt with 151A, which was defeated, and now we see more as the states try and come to consensus on what the reserving methodology should be for products. And I think that's the biggest unknown right now as we continue to work with our state regulators to figure out what is the appropriate amount to make sure that our clients' money is safe and that the insurance carrier is safe, but still able to offer the benefits that those clients are looking for.
All right, Lance, thanks for taking the time today.
No problem, Scott.
My guest has been Lance Sparks. He is Aviva USA Senior Vice President for Annuity IMO Sales and Distribution, and you're watching Annuity News Now.